Connecting. Good. All right. So we are now recording. And everyone, welcome to our fourth webinar on Generate Webinar Series, Fuel for Your Business, the Cash Flow one, the last of the webinar series. Please, if you haven't, if you're looking at this or listening to this for the very first time, we have the other three webinars also. Where can we find the other three webinars again, Scott?
Say that again?
Where can we find the other three webinars online?
Yeah, information. I will post you a link right now in the chat box. It's currently on our Eventbrite page.
Okay.
And the date and the location. So I'm going to post that right now.
Okay. So I want to welcome Scott Andrews, who's our business development manager out in Newfoundland. And for those of you that are out there, he is the guy to connect with. Just an awesome guy, all around, knows his stuff, active. And did you know that Scott loves to mountain bike in the winter? Hey?
That does, yeah. When there's snow on the ground.
Even when there's snow on the ground. Okay.
Which there currently isn't right now.
Yeah, yeah. Super. Okay. So we're going to get going on this, and then please keep in mind that I'm open for Q&A. If you've got any questions, by all means, ask away. The best way to do that is to ask through the chat box there, and also Scott's very good at catching these if I miss them, right? So my name is Dominic Lonker. I'm the entrepreneur in residence based out here in Toronto, and my role is twofold. One is to assess viability of an idea, and then to help people with their business plan as they're applying for a futurepreneur. So just I'm brief of who I am and what I do. But today's webinar is the fun and fabulous Fuel for Your Business Cash Flow. We're going to take you through this. What you just need to keep in mind as we move forward on this, here is the outline, the business plan outline. And as you can see, it is the fifth major section, finance, here, that we're going to be looking at. And what I say to people when they're looking at the business plan is the deeper you go into the business plan, the more interconnected all the elements are. So it's a bit like weaving that, you know, if you untangle one piece, then a whole bunch of other pieces will untangle. You'll see as we go deeper into this and we start talking about things such as sales forecast, startup costs, and cash flow, how interdependent and how interrelated they are. For those of you that are also here, you can see that Scott has posted both the information on where to get the past webinars, how to get a hold of him. So thanks again, Scott, for sharing. Okay, so let's move forward on this, and let's take a look at a term that I like to call the boss of all bosses, which is really the cash flow. Just something that you have to wrap your head around. Remember that a business plan is about the future. It's about projections. So there are going to be a lot of assumptions. And one of the words that you cannot use or you should avoid as much as possible is, I don't know, I'm guessing. Who knows what's going to happen in the future, right? So instead, always remember to substitute words with guessing, with projecting, estimating, providing a rationale. The more you can do that, the more useful your business plan will be. The less you do that, then obviously, then it's just a piece of paper that you just decided to slop some stuff on there. But there are four pieces of financial pieces of information that I really like to refer to. One is the sales forecast, which we did last time, if you remember, for those of you that took the sales and marketing webinar. And I'm going to review this later on because it plays into what we're doing. Startup costs, which I'll talk about today. Operational costs is what we did in the first webinar. So again, if you need to review that, go back to the first one. And then the last one is the cash flow. Cash flow is king and queen. Actually, cash flow is supreme. You'll notice that I don't have on there income statement or balance sheet, mainly because the income statement, which is obviously important, it talks about profit and loss, is connected with our cash flow template. And more importantly, I can learn everything from a cash flow, what actually is your profit and loss. Balance sheets I won't go into much because really, for all intents and purposes, when you start, it's not that huge of a deal. unless you're spending millions of dollars, and therefore assets are going to be important. But for our purposes, the balance sheet isn't as important. These other elements are, which I'm going to take you through a step-by-step approach, what they all mean, how they fit in. So remember, we're dealing with the fifth section, which is the finance section. And the first thing you need to think about is, to get your business off the ground, you may need startup costs. So startup costs is another way of saying, how much money do you need to get your business off the ground within the first year of business? So within your first year of business, what do you need to get it off the ground? And we're going to look at some specific examples, how that works, whether it be for marketing purposes, whether it be for opening a store. How much money do you need? And as much as possible, you'll notice you should be specific. So it's always a bad idea to say, well, I need $40,000 to start my business. Why? Well, just because I need $40,000, right? I'm starting a business. Especially since the vast majority of people getting money will get it from a loan or maybe an investor, if we're lucky. But it's rarely unlikely you'll get a grant. Grants are very few and far between. So you always need to remember that you want to put your money to good use, because you're going to pay, not only do you have to make sure that this is sustainable, but you have to pay back the loan. The second piece of the puzzle is, so where is this money coming from? We'll talk about that a bit, but certainly the money can come from your own investment, from your pocket, right? That's one piece of the puzzle. It can come from family and friends. That's another piece of the puzzle, right? Sometimes they're called family and fools, but really, all it means is that whenever you ask for money from people you should put it in writing so they know what they're getting into. It's always wise to do that. No matter what people tell you, it's always nice to write it out. You can also get it. I said a bit investors, but usually I tell people to be very careful. It's very unlikely that you're going to get an outside investor unless they're a rich aunt or uncle, or just happen to be an angel investor. You can get it from banks, and then of course you can get it from lending institutions like ourselves, like Futurepreneur. So there's many ways where you can get funding. The purpose of today is to show you how this works, regardless of where you go. Right. The last thing you need to remember when we look at startup costs, any lending institution will be looking at your credit score as part of that evaluation. So credit score, your credit rating, is something that you should always keep in mind. And remember that you can't hide behind an incorporation. So no one's going to lend you money if you're incorporated, if you're not personally liable for the loan. It's not going to happen. No one in their right mind is going to give you money because of that. Right? So you need to always remember that money is lent to you personally, regardless of what structure you have. Okay, so let's move forward. So one of the things I strongly encourage you to do on our website, under the resources page, there is a cash flow template, a template that we insist all our entrepreneurs fill out and use, because we put some thought behind it, and I encourage you to take a look at it because it can be very helpful, regardless of where you're applying for a loan. But let's make it very simple. So when you're starting up a business and you have startup costs, on the left-hand side, you are going to list what you need the money for. So, we're going to talk about what's a good use of funds in a minute, what's a bad use of funds. So a good use of funds in this case is inventory. You need to buy inventory, for example, equipment like a new computer, makes sense, marketing, right? What is, and of course, working capital, which I'll talk about in a minute. So on the left-hand side is the items you need, and then they add up to the total, $15,000. In this case, we're keeping it very simple. Then on the right-hand, as you move further right, you talk about where are the sources for that money coming from. So you could have easily had owner contributed, which is your own money. So for example, you could have said, well, I'm going to invest $7,000 of my own money. So that could have covered your inventory, for example. But in this case, this person is asking for $15,000 and they're getting it from a loan. That loan should be defined. So I've left it generic here, but for example, you could have said Futurepreneur, or you could have said RBC or TD. It doesn't really matter. You could also have another column if you're getting it from an investor or someone is giving you the money. You can also, if you actually have a grant, you can actually write grant, but it has to be in your bank. It can't be something that's kind of potential. So all of these columns, and we have those columns in our template, you can use and create. So you would create and it would all add up. This is how much I need. This is where it's coming from. So I'm going to take you through what's a good use of your money, and then we're going to stop and talk a bit about startup cost in case you have some questions. Now, the other thing to think about when you're doing your startup cost is to ask yourself, so what is a good use of money? So what should I ask money for in terms of my business? Well, one good use of money is a carefully thought out marketing plan. Carefully thought out means that you're not going to just spend your way to success. This is what happens to a lot of people. I need $15,000 for search engine optimization, or whatever the case may be. And if you haven't tested it, you don't know, or Google AdWords, and you don't really know if this is going to work, then it's usually not a smart idea. Don't get me wrong, at some point, some of you can and should spend money on digital marketing, but usually when you don't have test and feedback in the beginning, it's not a good idea. You can spend money on inventory, makes sense, right? Essential equipment, makes sense to me. Business insurance, absolutely. And I may have said this before, but business insurance, liability insurance is more, not so much business insurance to protect your assets, but more liability in case someone decides to sue you. Supplies and support, that can be ongoing supplies, support, it could be like legal advice. Be careful about spending money, and I'll talk about this in the next step, what's not a good idea, so I'll hold off on that. Working capital. So what is working capital? Working capital is money in reserve. So let's take an example here. Can we go back? Working capital here, as you can see, this person is asking for $3,000 in working capital. And what is important to keep in mind here, you're going to see later on when we get into your cash flow, why that's important. When you start your business, in many cases, your expenses will far exceed your sales. And so you need some money to offset that, and that's what working capital is. However, what I mean by being cautious here is if you ask for, in this example, if you ask for all $15,000 for working capital, then you may find that I may ask you some questions and say, do you really know about your business? Because to me, if you're not using the money to move your business forward, then what exactly are you using it for? So in this example, if you're using it for marketing inventory, that makes a lot of good sense for your business because it's going to move your business forward. But if you just said, I just need money in reserve just in case, then that tells me you haven't really thought through your idea well enough. Don't get me wrong, there are some businesses where working capital is very important and you've been around. Like, for example, some restaurants that have been around for, a couple of years, or they started already and they need some working capital because they have a lot of money going through their business, paying their employees and paying for food and the rent, right? However, it is things to consider, for example, like a retail location, if you're doing a restaurant, then you can definitely use the money for first and last month's rent. However, if you're working from home, no, you can't use that, right? You're working from home. Thank you very much. So that's not going to count. Certainly, if you rent shared spaces, you can do it first and last month's rent. I have some entrepreneurs who, go stir crazy working at home, which is fine. It's not fine, obviously. It's just fine. They've identified that they can't work at home. Then they look at shared spaces. But you don't want to be spending money on rent unnecessarily, especially if, for example, you're seeing clients a lot outside your office. Why spend all that, sink that money into a location? Leasehold improvements is another word for renovation. So if it's a retail space like a restaurant or a store, then you can use the money to use it for renovations. It's called leasehold improvements. Initial capital setup, like major equipment. You need a major equipment to get this, your business off the ground. That makes sense, right? Like a major piece of equipment at a retail location. Inventory, materials and supplies, very important in a lot of businesses. And again, in retail locations, working capital, which can be quite important. This is again having this money in reserve as you start getting this off the ground. If you're doing something like a virtual location, then certainly a website, but not if you're telling me that you're doing R&D. In other words, you're doing development, you're developing an app, or you're developing some different technology. It's a unique technology. Therefore, by its very definition, we don't know if this is going to work. So this happens a lot with the entrepreneurs I deal with, and they've got this app idea or this unique website idea. Then I say, well, then you need to build the website, show me that it works, and then we can talk, not before. And I don't mean a wireframe. I don't mean a design. I got a great idea. Here's an idea of my website. Oops, I want the back end to work, because if that doesn't work, you're in trouble. So what I tell most entrepreneurs, and you know, especially this happens with a lot of e-commerce sites, keep it simple to start. And you know, you may have heard this word, MVP, minimal viable product. But don't get carried away with the bells and whistles. So, you know, because in my experience, you're probably going to need money for a 2.0 version. In my experience, without a doubt, and I don't care if it's an e-commerce site, it's a regular website, within 6 months to a year, you're going to go, oh, now I know exactly what I need in my website. You're going to want to upgrade it. It's always nice to have that money to upgrade it. And sometimes what I'll tell entrepreneurs, if they've already got an app or a website they've built, then you know they can have some money for the 2.0 version. I'll give them that as long as the 1.0 version works, right? So as long as that works, I'm fine with that. But what you cannot use the money for, and let's be clear, to pay your own salary. It's a bad idea. If I hear someone say, I need money because, you know, I got to pay myself, right? Oops, problem. You should, you know, that money that you pay yourself has to come out of the revenue you earn in your business. That's why timing is important when you start your business. Hiring salespeople. I'm going to say, what are you doing? So when people come to me and say, I'm going to hire someone, I'm going to pay him on commission. Oops, that is a problem. Why would I want to hire someone on commission? They're learning, and they'll probably leave you anyways. So it's not a good idea. You need to do the sales so that one day when you decide to hire someone, you'll know exactly what to look for. R&D, and I talked about R&D. R&D includes everything from developing an app to working on a prototype. So if someone comes to me and says, I want to design a new clothing line. Okay, so show me the prototypes of your clothes. Oh, no, I don't have that yet. Okay, well then now that tells me there's still R&D. Research and development is not something we're going to finance. No one's going to really finance that. Because remember what's going to happen here, that even when you do get a product that you think is great, that is work in itself. So that has to work. You have to be able to show that to customers, potential customers, and get feedback, because you're going to probably need to change it even when you do a prototype. So when you do a prototype, you go, oh, here's my prototype, but I need the money now. I've just learned that I need to make some changes, and that's part of the reason why I need the money when I order the inventory. Or in some cases, like in some businesses, they need to make a mold, and it's really costly. So you don't want to be spending a lot of money on a mistake. Unnecessary rent, right? There's some people who, for some strange reason, they, you know, gone are the days where you need a big office space to deal with clients, right? Especially if you're doing B2B, you're going to be calling them from home or working on the road, and you're going to be visiting them in their office. They're not going to be looking at your address where you live, right? And quite frankly, a lot of businesses today can rent virtual office spaces as well if they want that image. Or protecting an eye too early. So someone may come to me and say, Dominic, I need money for trademark. Trademark? You haven't even sold anything yet. What are you trademarking? So, you know, this whole idea of trying to protect an idea too early and spending money on something that you don't know is not going to work is usually not some kind of something that I want to recommend people do. Is especially today, when it's so easy to tweak something and change it slightly, even in the case of some products that, you know, we had, for example, one of our clients, 21 Toys, who's been extremely successful in her business, and you know, been written up in Time and Fast Company. You know, the lawyer's advisor, there's no point in trying to protect this, because someone can just tweak the actual toy, what you have, and then good luck in trying to get taken to the court. So, you know, it's mitigating risk, and usually in the beginning, what you want to do is focus your energy on getting customers, not trying to protect something that for all intents and purposes, you don't know if it's going to work. Okay, so before I go on, I wanted to go back to startup costs and open it up for questions before we move on to the next major section. So do we have any questions about startup costs? That means, what can you use the money for? can't you use the money for? Maybe you have something specific to your business that you want to ask. So ask away, or maybe put it in the chat box. Does anyone have a question about startup costs? Just write yes, and then we can type away. No? Scott, do you have any comments about startup costs that you want to add?
Yep, super quick question, Dominic. I get asked this a lot. Put any value into like depreciation values for equipment and stuff like that?
Yeah, so so a depreciation is something that's done usually on the balance sheet, and it's not done in the cash flow or startup cost. So none of that can be asked for. You can't ask for depreciation, but certainly when you're doing your taxes, your accountant will be able to tell you how much you can deduct depreciation on the assets you have as an expense. So that's where that comes in. So remember, there's a couple of things going on. One is startup cost. We're going to talk about cash flow. And then there's the whole element of what you can claim on taxes. And that's where that becomes more effective, what you can do with the depreciation. But certainly you can't ask for money for depreciation, so no. Does that answer the question, Scott?
Yes, it does. Yeah. No, I get a lot of people ask me that too. And what's your opinion, Dominic, when it comes to for startup costs? For like a lot of people will say, how much should I overinflate my startup costs? So I think I need $15,000 to start my business, which includes your inventory, computer marketing, working capital. Do you think I should add in another $10,000 as a buffer? Or you know, I know I need a computer. I can get one of those for $2,000, but maybe I should get, you know, a $4,000 computer. That kind of stuff. Yeah. Overinflating amounts early on.
Yeah. So here's my take on that. Let's face it. When we start a business, we all kind of fall in love, and so we're willing to spend whatever it takes. So our job as an entrepreneur, especially when we're starting out, is to watch every penny we spend. That doesn't mean that if it makes sense to spend it. So sometimes I'll tell entrepreneurs you need to spend more money on your marketing. For example, networking. Where's your networking expense? Conversely, I'm going to be very careful in saying, so why are you going to spend, you know, $1,000 on a software, accounting software, which you probably won't use? Is that smart sense? So it's more about asking yourself these questions. What is it used for or not? In capital-intensive business such as a retail, restaurants, I will tell them to take as much as they can get. Why? Because in those particular businesses, there's a lot of cash flow going through and out, so they need every penny. Typically, in a service-based business, I tell them to hold back a bit more, right? Because they don't need, you know, if you're a web developer or a web designer, you can work from home, and certainly if they need some sophisticated software and they need, you know, a kick-butt a computer, then absolutely, right? So I think what's most important is to ask yourself, is this a realistic assessment of what I need? And you're going to see as we go along, I'm a big fan of never going for your best case scenario or worst case scenario, most likely scenario. Does that kind of answer your question there, Scott?
That does. That's perfect. Thank you.
Okay. Good question, by the way, right? Because, you know, the great thing that Scott is asking, he gets this asked a lot out there, so I think it's quite relevant. And quite frankly, Scott, you know, the things you bring up is what people ask as well here. So, okay. If we've got no other questions from people listening in, I'm going to move on to our favorite, ta-da, cash flow. So cash flow is, in very simple terms, money in versus money out month by month. It's really, when you think about it, it's the money that's left in your bank account at the end of the month. And so there, for that reason, I know people use it a lot. They say, I have negative cash flow. Well, sorry, but there's no such thing technically. You can have a negative loss, or you know, sort of a loss, not a negative loss, it's kind of silly, but a loss for the month, right? But at the end of the day, you either have money in your bank account or you don't, right? No one, like, you don't pick up your bank statement and it says negative. Now, of course, you may have to borrow money and you have to put it on a Visa, obviously. But a way to think about cash flow so that it's really easy to wrap your head around this is it's budgeting, except it's budgeting for your business. And here's the dilemma. Let's face it. When people tell me, oh, they don't know how to do cash flow. No, you probably don't like to do it. It's not the same that you can't do it. If you can budget, you can do cash flow. Now, I get the fact that we don't like doing it, right? But those are two different things, right? In fact, you don't like doing it and can't do it are two different things. The truth is that, you know, when we work for someone, in our head, we kind of know the money we're getting in our pockets, and we get it automatically, so that our budgeting is, what happened to my little system? I just lost something here. Just one quick set. Oh, what happened here? I don't know what. Oh, there it is. Sorry. Okay. Something happened here. My mistake. So please, apologies there. Just something went blank in my screen. So the cash flow, when you're looking at it, is another way of budgeting. Budgeting what money's going to come in every month, what's going to come into your pocket, what's going to leave your pocket. And I think the best way to understand this is that, you know, because when you work for someone, you're guaranteed a paycheck. When you work for yourself, there's no such thing. And that's why cash flow becomes so essential. And so,
Dominic,
yes?
it's Scott. Can't see your slides anymore. We're looking at the WebEx Cisco screen.
And I don't understand why. 'Cause something happened. So mine is showing. So yeah, I don't know why Alejandro's screen is being broadcast. Because I noticed that too. So how do I do this now? Let me just take a look here. No. Let me just see what happened, because you're right, there's somebody else's screen here. How did this happen? I have no idea. Let me just see. Is it on?
We're back. Yep.
Okay. All right. Thanks.
Cash flow is screen.
All right. Thank you. These technology always. All right. So, where was I? Oh yes, cash flow. So the significance of cash flow, as you start looking at this, is really it's about budgeting for not just your business but your life. You're going to see how this ties into your personal life as well, and that's why this makes it so crucial to the success of your business. Okay, so let's move in. Right? Let's go a bit further to understand that because a cash flow is a budgeting, it's a projection into the future, and that just means that you are projecting for 24 months in our cash flow, anyways. What I recommend people do. So you're going to make assumptions and projections for every single month for the next 24 months going into the future. So yes, it can be, sometimes it can be challenging, but certainly for the first year, if you do this right, and you'll see when you look at this, it can be extremely helpful. So take a look at this. Money in is what we're talking about in the first part of the segment. So for the particular month you're in, let's say, you know, February, so you talk about sales receipts. So this is actual money in your hand. Shipping, if you charge shipping to customers, that's money in your hand. If you get a loan, that's money in your hand. But it's not profit. So you don't confuse profit. It's just money in your hand, right? That's two different things. Profit is what you're left after revenue less expenses, but that's not what a cash flow is by itself. The second piece of the puzzle is money out. So that's actually money that's leaving your hands for that month. And then you have different types of expenses. You have fixed. So these are expenses that are that you, like, for example, marketing that you've already assigned to pay every month, or your internet expenses. So these would be fixed expenses, right? Variable expenses are what you incur when you do something, when you make a sale. So you make a sale, and then all of a sudden it costs you for the cost of sale. It also includes things. By the way, someone's on the line. If someone can just mute, can't see who it is. Someone, let me just mute people just to make sure. Okay. It also includes interest and principal payments. And when you get a loan, you have to pay this back. So this will show up money leaving your hands. Paying others. So if you subcontract your work, or if you have a restaurant or a cafe, and paying employees. And of course, paying yourself. Because at some point, you have to pay yourself. And if you're not paying yourself, then you have to ask yourself, so how are you making your income? Questions to think about. So what you need to look at here, let's take a look at the cash flow. So here's a simple version of a cash flow. I'm going to take you through this. Please keep in mind that we have a template online for you to use. And once you fill it in, it fills out the numbers for you. It's quite useful. But let me just give you the basic principles. So you'll notice in the cash flow, it's done by month. So you will actually fill in the month that you believe, in this particular case, that you get the loan. So let's say, you know, irrespective of when you started your business on the side, if you believe you're starting your business in September and you're getting a loan, that's when you start your cash flow. So now your first year cash flow is September 2018 to August 2019. That's the first year of business. So then you write sales. We're going to talk about sales and that number. You're going to start to see how this all interrelates. Because remember last time we talked about sales forecast. So that number is going to come from your sales forecast. I'm going to ask you how you came up with $1,000. And in a minute, I'm going to show you how that interrelates. There's the loan of, let's say, $15,000. Let's say you're borrowing a loan and you get a loan for $15,000. Now we know that your total cash in, so what you are expecting to get in your pocket, is $16,000. That is the total money that is coming into your bank account, into your wallet, or into your purse. That's the expectation. Again, I want to repeat, cash flow is about projected, it's about the future. Then you do up expenses, and by the way, in our template, the template is done in such a way that you can fill out details of the expenses, right? So what you need to think about here is, you know, what are those details of expenses? So what you are eligible to put in expenses or anything that incurs in the process of business. So that includes things such as legal fees, for example, maybe if you get an accountant, certainly advertising fees, utilities fees if you're doing rent, bank charges, telephone and internet, maybe you have to pay for shipping charges, right? So you charge your client shipping, then you in turn have to pay for shipping, right? It may also include credit card transaction fees. So anything that's really incurred in the business. And the way you do this, there's only one way of doing this. That is, you sit down and every single month you estimate what's going to come out based on your sales. So this is what I'm planning on sales. So for those of you who haven't done the sales piece, then you can go back and take a look at that. And you estimate the expenses for that month. One of the things you have to be mindful of, and you'll see this in a minute, is at what point are you going to start paying yourself? Now, the reason why this is so important is that if you're doing this in a way that's, you know, worst case scenario or best case scenario, then you're right, then this is not that useful because you're giving yourself an escape. If you say, well, in the worst case scenario, this is what will happen. But if you tell yourself this is what's most likely to happen based on the research I've done, then that's good information to use. So my experience is that if you don't know the answers to the cash flow, then that's your homework. Find out. How much would a certain expense be? How much would my sales be projected for that month? What kind of activity am I going to do to drive sales? There's your homework. You're going to see in a minute when we get into some details here. Now, in here you'll see it says startup costs, $12,000. So that's telling me that you've borrowed money, and you can see at the top $15,000. But you're going to spend $12,000 on whatever, on equipment, inventory, marketing right off the bat. So that means you're left with $3,000. That's your working capital. you have $3,000 in working capital. That's the money in reserve I was talking about. And you'll see in a minute, if you didn't have that $3,000, you'd be in trouble. So this is the loan interest. So this is in our system. This automatically gets automatically comes out. For our particular loan, you don't pay the principal in the first year. So therefore, the total money leaving your hands that you're projecting is roughly over $14,000. So you can start to see. So as Sandy said, if invoice to client is January 20th and it doesn't get paid until February 10th, does it go in the February sales column? Yes. So one thing is to make a sale. One is to have cash in hand. So that's why it's called cash in. So if you don't get paid until February 10th, then you can't put that money in as a cash sale. So you're absolutely right, Sandy. This is money that you project you're going to get. So if some of you that are doing B2B and you say to your client, I'm going to be charging you $2,000, and they say, okay, but I'm not going to pay you till the job is done, and that won't be till February, then you're absolutely right. You can't put that in until February. Because remember the formula. Cash flow is money in, money out. If you didn't get money in, you can't put it in. So that's how that works. Does that answer your question, Sandy? Okay. So let's go back to this. So you can see that total cash in is $16,000. Total cash out is roughly $14,000. You're left with the difference, roughly $1,900. Right? That's what's left in your bank account. You can see that if I didn't have working capital, the $3,000, I'd be negative. That cumulative cash flow, which is the very last line there, would be negative. And as I said to you before, there's no such thing as negative dollars in your wallet. You either have dollars in your wallet or you don't. And if it's negative here, you've done something wrong with your cash flow. So that last line, cumulative cash flow, if at any time you're doing this exercise, anytime, for any month, any 24 months, and it's negative, you have done something wrong. You either have to increase your sales, decrease your expenses, or a combination of the two. You have no other choice. So Loretta says for a home-based office, would one allocate a percentage of home expenses? No. So you do that. That's exactly how. This is why Scott was asking me that question about depreciation or percentages. So if you have a car or a home that you're using partially for business, at the end of the year when you go to do your taxes, you're allowed to claim that percentage that you used for your home. So, for example, if you, in your case there, Loretta, you found that 15% of your home is used for business purposes, then you can deduct a percentage of your rent or your mortgage payments and utilities, and that gets part of as a deduction, as an expense deduction at the end of the year on your taxes. The same goes for your car. If you're using car for both business and personal, then that has to be kept track of. You know how much percentage you use for business. That percentage can be claimed at the end of the year. Does that make sense? That's a tax issue. So in cash flow, you can never put anything that's a combination of business and personal. But using your example again, if, for example, you used a taxi to go visit your clients or public transit, then that's strictly for business, then yeah, 100% can be put on your cash flow. So that's how that works. It has to be 100%. The only exception to the rule, but it's kind of funny, you're allowed to put 100% of your internet expenses, even though we all know we use internet for business and personal. Go figure, right? But that's just how it is. Okay, but I want to show you something here that's just as important. So I want you to take a look at this cash flow here and look under September. The amount of money I have left in my bank account that I'm planning for, now remember this is all projected, is $1,910. So I move that amount over. So at the end of September, in the beginning of October, I'm going to have that same amount of money. So you see where it says cash flow from last month? That's the $1,910. So I take that money, I'm moving it forward. So now I do the same for October. I estimate my sales, I estimate my expenses, and you notice, oops, I have a lot more expenses than my sales. I've actually lost money for that month of October. So yes, that's what people usually say, I have a negative cash flow, but really that's a loss for the month. So I've lost $590 for the month of October, which is fine, provided and only provided that there's enough money in my bank account to cover the difference, right? So I've lost $590, but guess what? I've had $1,900 in my bank account. So now my money gets reduced further to $1,300. You can start to see if you keep losing money, you're going to quickly run out of money. So a cash flow is important for that reason. The other thing that's really important, included in expenses here. I don't know, can you see my cursor? Does this cursor show up in your, what you see? This, like this, my little thing here? No, okay, okay. So then I just have to tell you. So if you look at expenses, 2,000 and 1,700, part of those expenses are going to be your owner's draw, money you take out of the business to live off of. Because if you keep telling me that you're not going to take any money out for your own salary or for your owner's draw, I'm going to be asking you and saying, okay, so I noticed that you're not taking any money out for 6 months, but your expenses for each month is $2,000. So where are you getting $12,000 from? Because I need to know, and you need to know. So everyone has different reasons. You move in with your boyfriend, or you're living with your spouse, or you're a student, or so it's just about coming to account to what your living expenses are, and at what point do you have to take money out of your business? Because that'll tell you when you need to launch, right? Because if someone has a high mortgage and they have to take out $4,000 every month, oops, that may be problematic to be launching the business right away that way. So a cash flow is a wonderful tool, not only about your business, but it ties to your personal life. So let's take an example here, again, things to think about. So under the expenses, do not include things, so these are things in the startup that are not found in the startup cost. So for example, in the startup cost, if you said, I need $3,000 for marketing, you're not going to include it again every month because you've already accounted for it. It's double billing. You're just making it worse for yourself. So this happens a lot where people say, I need, $5,000 for a website. And then they include it again in the cash flow when they've already included their startup cost. So you don't have to do that. And again, the second item here, I told you before, you can't include items that include both business and personal. So if you have a car, business and personal, or you're working at home, you can't include that in the cash flow because it's going to inflate your expenses unnecessarily. You have to work. You have to live somewhere. You have a car anyways for personal use. So that's the logic behind that. That's not to say you can't put on there like entertainment expenses if you're taking your clients out for lunch. But when you get to your income tax, you're only allowed to, you can only claim 50% if you take some client out for lunch, right? Expenses related to running the business. So certainly you have to keep track of on a month-by-month basis. Okay, so when I'm going to be reordering inventory? What about my networking costs? What about things such as if I go to a conference? What about what I pay for an accountant? When will I pay for an accountant? What about subcontractors? When will I pay for subcontractors? And then, of course, you notice an owner's draw. When will I pay my own salary? And please, whatever you do, don't do what I call the yo-yo effect, where you take out money when you have it and then you don't take any out later. It's best to do it in stages. So, you start with, well, I can take out $500 every single month now. Okay. Next month, I'll take out $750. $750. The next month, I'll take $1,000, and then you keep upping it, right? Because as you know, there's nothing worse than taking out $3,000 one month and then $0 the next. It doesn't make for good budgeting purposes. Okay, so let's go back to these are expenses. You can start to see how now you have to put on your thinking cap. So, okay, what kind of expenses will come out? Is this true? Is this most likely to happen? And this is where you do your homework. So if I say, how much money do you need for networking? And you give me some number, like I need, $2,000 for networking expenses. And I say, where'd you get that from? Did you make that up? Aha. And you don't know, therefore, now you check. You go and ask association fees or conference fees, or how much will it be for doing a booth? This is why you do this exercise. The purpose of a cash flow is not so you can, show Revenue Canada that you're smart, so that you can make smart decisions. That's the real, benefit of doing a cash flow. It's to help you make better decisions. That's really what the point of this is. Now, the other element in here is, remember how I talked about sales. See the sales here? September, $1,000 and $1,200 in this particular example. So where do you get that information? Remember last webinar that I did, I talked about sales forecast. And what you want to look at is your sales assumptions that you made in your sales forecast. And please review this piece of the puzzle. So this was taken for this example that we did back in last week on this particular webinar on sales, how this person came up with this number. And the beauty of this is now this gets plugged into your sales forecast. So this gets plugged into your sales up there. So when I go back and ask you, so what is your sales? How'd you get that? You'll have an explanation for me. Certainly for the first 6 to 12 months. After that, it becomes really difficult to guess, right, or to plan for, if you like, but some kind of idea of where you're getting your sales from. It doesn't mean that this will be exact, because now here's the good news. When you go back and you look at your cash flow, this section here, you can actually do something in September that says actual. So now you start your business and you have a column that says actual. So this is September projected. And then you have another column that says actual. And then you say, so how much sales did I get? And then you write that down. How much expenses actually left my hands? So part of this process is doing the work and then monitoring it, evaluating. How true is this? You see, the problem is that so many people, when they do this, they're just plugging in numbers. They're kind of guessing, no wonder. And they don't even look at it anymore because, well, they guessed, and therefore it's not that useful tool anymore. You want to make this tool as practical and useful as you can possibly get it. Don't get me wrong, things won't be exact. And from my experience, maybe you'll get 50, 60% accuracy, but that's a lot better than having 0% accuracy, because it can be the difference between success or failure in your business. One of the things to think about as you look at the cash flow, and I just want to reiterate this, is that ultimately, you want to make enough to make a profit. So revenue less expenses gives you profit. That's, why you're doing this ultimately. But as you can start to see that if your cash flow isn't working properly, then it doesn't matter how much profit in the end you make, because if you can't pay the expenses, the bills, and you can't pay yourself, then you're in big trouble. For that reason, when we're looking at this, and by the way, our particular template automatically figures out your income statement, so you don't have to worry about that. But I can get all my answers from your cash flow. So let's go back to your cash flow. See, I can see right away in October, you lost money, $590. And I can go right across, and we have a total, only because of space here, I can go right across, it will total exactly how much you made for that year going in my cash flow. So I can see that without looking at the income statement. One of the things to think about when you're looking at your cash flow, and to give some serious thought, is that when you don't know the answers to some of these questions, that tells you what you need to do, right? And, I sometimes, when I'm dealing with entrepreneurs, I don't even have to talk about their business plan. I can just talk about their cash flow. And it tells me exactly where they're at, how much they know, how much they don't know, right? Because in the cash flow, if you don't know the answers, then you have to go investigate them. And some kind of reasonable assessment is what you need to do. So what a cash flow does, it says to me, this is the story I believe is going to unfold. It's there to also decide what choices should I make. So when you look at your cash flow, you go, oh boy, in this month I have a lot of inventory coming out. I have to spend $5,000 worth of my money because I have to reorder. Well, I have $5,000 in my bank account. I should plan for that, right? I should monitor and evaluate where I'm at in my cash flow. Is this true? And it does something else. It also helps you set goals. So if you say in this example, because you can also work the other way around, where you go back here and say, well, I planned for $1,000 in September. That's my goal. So let's get busy trying to achieve that sales. Because let's face it, all of us know that we're more likely to achieve a target if we have something written out, something that we're striving for, and then we break it into chunks, right? So we go $1,000 this month, break that down into weeks. So that's $250 a week. So how much is that a day? $50 a day. So I need to make $50 a day in sales. What can I do to do that, for example? Or, it's $1,000. That's 2 clients. So where am I going to get two clients? What do I need to do? What action steps do I need to take to get 2 clients? It's a tool also to get you moving in the right direction. So when you wake up Monday morning and you've got this cash flow, you've got this money, you know what you need to do next. Because if you don't have that, then very likely when you get all this money, you may blow it very fast. Let's face it, you know, money can move through your fingers very fast if you're not clear on what you're using it for. Okay, so we're coming near to the end, and I want to open it up for questions. I also want to stress that we have resources for you. And please, here's that website for you to look at. There are the templates here for to use, but specifically, and I'm going to be sending this to Scott, and Scott will be sending this out. Download the cash flow template and look at the 3-part video. It's right here. Just click on the links here, and off you go. Start playing with this. There's no other way of doing this but playing with this, putting in the numbers, fidgeting with it. You can save it or not save it. It's a very useful tool and valuable for an entrepreneur. Please don't get someone else to do this for you. It's not an accountant's job to do your cash flow or bookkeeper. That's your job. They can do the bookkeeping and they can do the accounting, but a cash flow is always the responsibility of the entrepreneur. You need to know where you're at with this. Obviously, later on, when you do the bookkeeping and you don't want to do the numbers anymore, you can give it to someone else. But in the beginning, you need to know, you need to keep your pulse on this. So never take your eyes off the cash flow because it's the lifeblood of your business. Okay, so before I wrap up, any questions about the cash flow, about startup costs, or you know, sales forecast? Is it a piece of cake? Okay, thanks, Sandy. Sandy says it's a lot clearer. Scott, do you have anything you want to chime in about the cash flow? Again, you know, just from your experience, I think, you know, your experience with working with entrepreneurs as well.
Absolutely. I think a couple of people have mentioned to me in the past, like, I think they're getting confused with the income statement and the cash flow.
Yeah.
And I've seen people submit both. And so they've asked me, like, look, Scott, like on my income statement for the first year, I'm showing as a negative net income just for the total for the year. But my cash flow is positive. So is that okay? And I've also seen a reverse too. So as they said, is it okay that in month 3 I'm showing a negative cash flow there, Dominic? You know what I mean? And those are probably the 2 most popular ones I get.
Yeah. So
is it okay to have a negative month, you know, in your cash flow?
Yeah. So I'm going to ask a very good point. So the first part of the piece of the puzzle, it's normal to have a loss in your first year in the income statement, right? So let's not confuse that. You can, as long as your cash flow at the bottom of this is positive all the time, you can have a loss, right? It's normal for a lot of businesses to lose money in the first year, right? So you'll see, oh my God, I've lost money in the first. That's fine, as long as you are getting closer to making more money in the second and third year. So that's the thing I would answer to that. However, the second part of your equation or question that you asked, Scott, is that you can have a loss in the month. So if you look in October, that $590 loss is fine. However, what is not fine is the cumulative cash flow. That can't be negative. So for example, if your expenses in this example of October were 27, I'm just trying to think, let's say they were $3,000, right? Like a lot more. And then this cumulative cash flow ended up being a negative, then you've done something wrong. So at no point can this cumulative cash flow be negative. So that's where it becomes problematic. And that's what people have to guard against, is that negative cumulative cash flow. I usually tell people when you're looking at the cumulative cash flow, try making sure it never goes under $1,000 a month, because under 1,000 is kind of like the danger zone. At the same token, you shouldn't be left with a huge amount of money, because I'm going to say, what are you doing with $50,000 in your cumulative cash flow? Because you're telling me you've got $50,000 in your bank account, but you didn't take any money out to live off of. So what's going on here? So you can start to see, because of the nature of a cash flow, is a fine balance in ensuring you've got some there, but not too much. Unless, of course, you've got a huge expense coming in December, because you're going to make a $20,000 order of inventory, in which case you need to have a lot of money in the bank account, right? So you're going to start to see, when you start using the cash flow, that this is not a straightforward exercise asks you to make some choices. Some of these choices are tough. How much money should I borrow so that I'm never past the $1,000 in my cumulative cash flow? But at the same time, I shouldn't borrow so much that I've got like $50,000 sitting in my bank account. So it's that balance that you keep playing back and forth.
I think, Dominic, that makes a lot of sense. And I think I'll just add to what the question that Sandy brought up a little bit earlier. Mm-hmm. I've had a lot of people that they didn't understand because let's just say that they secured a contract. And I had this example here in Newfoundland a while ago where this person secured like a $100,000 contract with the federal government to deliver a bunch of products and services. But what they didn't realize, so that looked really, really good on the income statement because they signed a contract, but what they didn't realize was that the government wasn't going to pay them right away, and it was going to be, they were going to pay a certain portion in a couple of months, and then a certain portion 6 months down the road, and then a certain portion when all the products were delivered. So their cash flow statement actually showed that they weren't going to have enough money to even get into the third month to pay their rent, to pay their salaries, to pay the initial inventory that they needed, so that they had to then go back and revise their startup cost to reflect that buffer. And that's what the cash flow really showed, that gap.
Yeah, exactly. So that's why that cash flow becomes really, really important. And that's why anyone listening here, please, you need to wrap your head around this whole concept of what a cash flow is. This is money in and money out. So if you're not receiving it in your pocket, then you can't put it in. And if it hasn't left your pocket yet, you can't put it out. It's only when it's leaving your pocket and when it's entering your pocket. That's how you use that month by month. Because that's the reality. It's the reality of your life. It's the reality of your business. And that's why that becomes so important.
I use the example, too, sometimes, Dominic, that it's a cash flow statement is often like your bank statement. If you went into your ATM and, you took 20 bucks out and it said that you had $500 left in the bank and your rent is due next, tomorrow, and your rent is $1,000. Whereas if you looked at it from a different perspective and you said, well, I normally make this amount of money from my job per month, and here's my expenses. So on paper, I should have enough money coming in and out, but the bank statement actually shows what you spent, what came in, what came out, what's there on that particular day. Yeah,
absolutely. So yeah, you can, as you can see that with all of this, when we're looking at this, and one of the things that I just remind entrepreneurs is we're looking at these numbers because let's face it, most entrepreneurs when they start, they're not interested in the numbers necessarily. This is, that's not something that they're no one wakes up and gladly looks forward to their cash flow. I mean, most of us don't unless you're an accountant, right? But most of us aren't, rubbing our hands saying cash flow. But one of the things about a cash flow that becomes so important is by quantifying and putting measurables in place, it tells you what kind of action steps you need to take place. And that's the key. What actions am I going to take so that when you start your business, you're not spending 2 months working on your website when you should be getting out there networking, because that's going to bring more cash into the business. Aha. That makes more sense now. And that's why I think this can be very useful. Okay, so if there's no one with any questions, I want to wrap up a couple of things, and then Scott, you can also talk a bit. But I'm going to be in Newfoundland in these particular dates to do Activate workshops, which is really helping put all the pieces together of your business plan. Obviously, it's going to be it'll be in the morning, so it'll be 3 hours. It'll be a big picture overview of your particular business plan, particular issues that are geared towards your business and your business plan, as opposed to the theory. I'm not going to rehash everything. I'm going to make it a bit more practical as well. But obviously in 3 hours, there's only so much we can do. But I'm hoping that by reviewing all of these 4 webinars, you'll get a better sense of what you can do in the workshop, right? You'll come a bit prepared with some of these answers and some questions. You may not have all the answers, but certainly some questions. So I'll be in Grand Falls on March the 13th. And in St. John's on March 14th, and in Corner Brook on March the 15th. Coffee and snacks will be served, but it's free, but you have to register ahead of time. And Scott can certainly talk more about that. Scott, do you want to talk a bit more about that?
For sure. Thanks, Dominic. So if you just go to the chat box I have been typing in all of the references that Dominic has been mentioning throughout the things. So there is a link to the Futurepreneur Canada resources page there with all those templates and statements and our business plan writer and our cash flow statements. So that's there. I also have my information listed there. If anybody is in Newfoundland and Labrador, I know we do have some people on the call from all across the country, and we even had somebody from the U.S. logged in before. But if you want to get more information and you're in Newfoundland and Labrador, please reach out to me. There's my phone number and my email address there. I have the link. Dominic has it listed there on the screen, but I actually have the link that you can click on there too in the chat box. That brings you directly to our landing page, where you just scroll down to the word activate. There's a little plus next to it, and then you can register for any of those in-person workshops directly with Dominic there. Again, they're free. They're all going to be held from 9 to 12, like Dominic mentioned, and they're all going to be at College of the North Atlantic. The details are provided there, so please register. You get to see Dominic in person, and as helpful as he is on these webinar ones, he's even more helpful in person because you get to ask him questions and stuff like that, and there's a lot more one-on-one. I also have the links to Dominic's 3 previous webinars that he did through YouTube. All 3 of those are there, our operations one, our market research one, and our sales and marketing one. So you can click on those, watch the first 3, rewatch them if you want, and this one that he did on the cash flow should be up within 24 hours. I also have the link to the cash flow template, and also got a little link there for our brand new side hustle program that we just launched on Thursday, February the 1st. This is the brand new exciting program that we're launching just for the month of February. Applications are open from February 1st to the 28th. And unlike our core startup program, that's for full-time businesses, this is for people who are currently working full-time and are looking to start a side business, a little side hustle, and you need some financial support and help and guidance with us. If anybody might be interested in that, I have the link supplied there. You can click on it and you can reach out to me for more questions or information.
Yes, and this is open to anyone, Dominique. I just wanted to mention you asked, there's no age restriction for coming to these workshops.
The workshops are, so the workshops, as Dominic said, these are for anybody. There's no age restriction on these. Our in-person sessions that we're having in March, they're for anybody. The financing program that I put up there, this side hustle one, that is for people in our age range, 18 to 39, but the workshops are not age restricted. So if you're like myself and Dominic, who are over the age range, hey Dominic, we're gonna be there. So anybody else, if you're over that 18 to 39 age range, you will have at least 2 people who are also over that age range there too. So. Okay, so
I think that's everything. I just wanted to thank you all for coming up and listening to these webinars. I trust that they've been useful. The great thing about this, once we put them up, you can go back and review them. You can review our resources online, and I certainly hope to see you out in the workshops. And please come up to me and say hi to me if you've been on these webinars. I always like it to put a face to a name or to people who've been listening in. So feel free to come by and say hi to me or to Scott. Okay, thank you very much to everyone for listening in, and I hope to see you in March in wonderful Newfoundland.
Excellent. Thanks, Dominic.
Thank you, Scott. Thank you, everyone. Bye-bye.